Right now, in the year 2026, banks across the United States are quietly flagging ordinary bank account moves made by retirees, by permanent residents, by visiting parents on B-2 visitor visas, and by working-age immigrants on H-1B specialty visas, moves that most of these families have quietly done for 20 years without ever hearing a word from any federal agency. If you have ever walked into a teller line with a cash deposit and seen the teller turn and look at her manager, if you have ever split a deposit into 2 trips on the same morning to keep the conversation short, if you currently send money home to family in another country through a wire transfer or a licensed money transfer operator, then what I am about to walk you through is about you, and it is about the people you love who rely on that money. The first consequence is that the bank files a federal report inside its own compliance system and quietly forwards it to the federal government. The second consequence is that this report is sent to the Treasury Department's Financial Crimes Enforcement Network, often called FinCEN, where it is stored in a federal database that other agencies can read in close to real time. The third consequence is that the same report can be quietly shared with the Department of Homeland Security and then with the United States Citizenship and Immigration Services during your next renewal, your next adjustment of status, or your naturalization interview, even when no crime has happened at all. The fourth consequence, and the one that matters most for a 68-year-old who lives in a quiet kitchen in Phoenix with 2 grandchildren nearby, is that this report can become a quiet line item inside an immigration file reviewed by a federal officer you will never meet. Before you hear one more rumor about the IRS watching immigrant seniors from a stranger's social media account, I want to be very clear with you about exactly what the federal law says, because the law itself is far less scary than the gossip, and the action steps are far simpler than what a notario will sell you later this month. Pay close attention through the next few minutes, because by the end of this video, there is one smaller dollar figure, well below the well-known $10,000 number you keep hearing about, that quietly decides whether your bank filing will become a problem for your immigration case today in the year 2026. Stay with me, because what you do not yet know about that smaller threshold is exactly what the federal agencies counted on you not knowing, and it is rarely explained at the teller window. This is not a brand new set of rules designed to attack immigrant seniors this year. The core rules have been on the books for decades, long before most of the people listening to me right now became regular bank customers in this country. The 2 statutes that drive almost everything I am going to say today are Title 31 of the United States Code, Section 5313, and Title 31 of the United States Code, Section 5324. The first law, signed into effect in 1970, requires every bank in America to file a currency transaction report anytime one person moves more than $10,000 in cash in a single business day. The second law, tightened in 1986 and updated again in 2001, makes it a federal crime to break up cash deposits for the purpose of dodging the first law, a practice the federal government calls structuring. In the year 2026, both of these statutes are being enforced with technology and with database speed that did not exist when they were originally written. FinCEN, the Treasury Department's Financial Crimes Enforcement Network, now runs an automated database often called the Bank Secrecy Act database that reads every flagged report from across the country in close to real time. The regulations that put that database into operation are the Bank Secrecy Act regulations codified at 31 Code of Federal Regulations, Chapter 10, with major revisions in March 2024 and a tightening amendment finalized in late 2025 and effective for 2026. None of this is new. What is new is the speed and the breadth of the sharing, and that matters because the federal government can now connect a deposit pattern to a Social Security number, to an individual taxpayer identification number, or to an immigration record inside hours instead of months. That is the change you should hold on to through this entire video, not the rumor you heard last week and not the story your neighbor told you at the senior center yesterday. The rumor is loud, the law is quiet, and the law is what decides your file. The number you have heard about, the one your teller mentions when you walk in with a stack of bills, is $10,000. That number is real, and it is the trigger for the currency transaction report I just mentioned. Today, I want you to put that number aside and look at a smaller threshold that most bank customers never hear about and most immigration newsletters never mention. The threshold is $5,000. Under Federal Bank Secrecy Act rules, a bank is required to file a suspicious activity report, often shortened to SAR by your bank, for any transaction of $5,000 or more when the transaction carries certain indicators inside the bank's automated monitoring system. Indicators include cash deposits just under the $10,000 currency transaction report line, deposits structured across a period of days in a pattern rather than as one movement, deposits inconsistent with the customer's stated income on file, deposits inconsistent with the customer's age and occupation, deposits funded by what the bank calls third-party payers, and deposits that come in through multiple branches or through multiple family members in a coordinated pattern. Because the threshold is triggered by pattern, not by single dollar number, a series of cash deposits of $2,500 each over 10 days can trigger exactly the same federally reported flag as one $10,000 deposit made all at once. In 2026, FinCEN also revised its Beneficial Ownership Information Rule, often shortened to BOI, expanding who qualifies as a beneficial owner and tightening the time period for reporting changes from 30 days down to 14 days, with major enforcement updates that took effect in 2024 and were further amended late 2025. So the surprise here is not $10,000. The surprise is $5,000. And the truly quiet surprise is that $4,999, repeated across weeks in a structured pattern, can look identical to a flag for the $5,000 threshold inside the algorithm that FinCEN shares with the IRS and with DHS. That smaller number is the one you should hold on to through the rest of this video, and that smaller number is also the one your bank will not advertise on the lobby wall. Let me walk you through how a single flagged line in a bank file is able to end up inside an immigration case, because this is the part where fear gets replaced by understanding. The report starts at your bank, where a teller, a branch manager, or an automated monitoring system notices a pattern that matches one or more of the indicators I just listed. The bank then files either a currency transaction report through the Internal Revenue Service, often shortened to IRS, or a suspicious activity report through FinCEN. The Internal Revenue Service is the agency that processes the currency transaction report and matches it against tax filings. FinCEN is the Treasury Department bureau that processes the suspicious activity report and runs the beneficial ownership database. Both reports flow into the Bank Secrecy Act database maintained by FinCEN and stored under federal law. From that database, FinCEN can share information with any federal, state, or local law enforcement agency that requests it under 31 U.S.C. Section 5318, the sharing authority known as Section 5318. The Department of Homeland Security, often shortened to DHS, has standing access to this database through Memoranda of Understanding that were updated in 2025. Inside DHS, the agencies that actually look at the data are the United States Citizenship and Immigration Services, often shortened to USCIS, which handles green card renewals and naturalization. Immigration and Customs Enforcement, often shortened to ICE, which handles removals, and Customs and Border Protection, often shortened to CBP, which handles entries at the border and entries through the global entry kiosks. The Social Security Administration, often shortened to SSA, has its own matching system that can flag records where the Social Security number, the Individual Taxpayer Identification Number, known as ITIN, or a work authorization document, does not line up cleanly with the earnings, with the bank statement income, or with the remittance flow that shows up on the foreign bank side. Then there is the Public Charge Record. Under Section 212 of the Immigration and Nationality Act, the federal government looks at whether an applicant for admission or adjustment is likely to become primarily dependent on certain cash assistance programs, and a bank report showing large undeclared inflows from third-party payers can complicate that assessment in 2026 when the Department of Homeland Security is reviewing an adjustment of status. So the file moves from bank to FinCEN to DHS to USCIS to SSA over a number of weeks, not months, and the movement is silent. That is the engine. That is the mechanism. and it is the engine most immigrant seniors never knew was running. Meet Maria, a lawful permanent resident from El Salvador who lives in Houston, Texas, and works as a certified nursing assistant at a hospital near the Texas Medical Center. Maria became a lawful permanent resident in 2021 through family sponsorship by her older sister, who was a United States citizen by birth. Maria's wages for 2025 were $42,000 a year, all reported on a W-2 wage and tax statement, with federal income tax properly withheld every pay period by her employer. Each month, Maria sends between $1,200 and $1,900 home to her mother who lives in San Salvador, and the money pays for her mother's blood pressure medication, a small rent supplement, and occasional groceries. Maria sends the money through a licensed money transfer operator that is registered with FinCEN, never as cash carried across the border, never as an informal courier envelope, and never as a hand-delivered suitcase. Maria keeps her transfer receipts organized in a single folder at home. She also deposits the rest of her paychecks through normal direct deposit in amounts of $900 to $1,400 per pay period into her checking account. In 2025, Maria began receiving $250 per month from her brother-in-law, who is also a lawful permanent resident living in California, to help Maria with her own groceries because her hospital hours had been reduced and her overtime had disappeared for several months. Those monthly $250 deposits, combined with Maria's own direct deposit payroll, occasionally pushed her account above a pattern that the bank's automated monitoring software quietly flagged. The bank did not call the police. The bank did not freeze the account. The bank filed a suspicious activity report through FinCEN under 31 U.S.C. Section 5318. The report listed Maria's alien registration number, the unique 9-digit identifier that ties her immigration record to her banking profile. That number landed her quietly on a flagged list inside the Bank Secrecy Act database. When Maria filed Form N-400, the application to register permanent residence or adjust status, in late 2026 for her own naturalization, the reviewing officer at USCIS ran a routine cross-check against the FinCEN data. Maria's citizenship interview was delayed by 90 days, not because she had committed any crime and not because she had hidden any income, but because the SAR triggered a secondary review tied to Section 212 of the Immigration and Nationality Act and to the public charge provision that the Department of Homeland Security reviews in 2026. Maria's case was eventually approved, but only after she produced the 2 years of money transfer receipts, her W-2 wage statements for 2025 and 2026, a written gift letter from her brother-in-law, and a short letter from her licensed immigration attorney explaining the source of the small monthly funds. That 90-day delay, that attorney fee, and that nerve-wracking interview were preventable. That is the first story I want you to hold on to. Now meet Daniel, a citizen of the Philippines who first came to the United States in 2019 on an H-1B specialty occupation visa, and who now lives in Seattle, Washington, with his wife Lourdes and their 2 young children, both of whom are United States citizens by birth in Bellevue. Daniel works for a software services company, and his salary for 2026 is $112,000 per year, all reported on a W-2 and matched against his bank account by the IRS every spring. His wife Lourdes holds an H-4 dependent visa and is not currently employed. Every month, Daniel sends $2,500 to his father in Manila to cover property tax, utility bills, and small home repairs on the family house that his father has lived in for 38 years. In addition, every quarter, Daniel's mother in Cebu sends a personal gift of $3,000 into the couple's joint checking account to help with the children's private school fees and with piano lessons. None of this money is illegal. None of it is income. None of it is supposed to be reported by Daniel as a wage. But $3,000, arriving 4 times a year in a steady pattern, looks very different to an algorithm that has been trained on United States federal reporting rules and that has been updated for 2026. Daniel's bank, a national bank with several branches across Washington state, flagged the pattern in 2025. The bank issued Daniel a Form 1099 miscellaneous for the $12,000 aggregated in that year, since the bank treats the gift income category conservatively. Daniel did not know at first that a Form 1099 miscellaneous amount often needs to be evaluated against the $19,000 annual gift exclusion per donor for 2026, and his tax preparer had not asked about foreign family gifts when she filed his Form 1040 in 2025. Worse, the bank also filed a suspicious activity report because the income-style inflow was combined with other pattern indicators, including a payroll versus deposit mismatch during one difficult quarter and a related branch deposit in Oregon made by his brother on a family visit. When Daniel's adjustment of status application under Section 245 of the Immigration and Nationality Act came up for processing in early 2026, USCIS ran the standard cross-check with FinCEN as part of normal workflow. Daniel's case was held for additional evidence. Daniel now needs to document the source of every family gift over the past 6 years, the exact relationship of every family member who sent it, the tax treatment of each gift under the $19,000 annual exclusion per recipient for 2026, and the Affidavit of Support Form I-864 that his employer filed on his behalf back in 2023 when his priority date first became current. Daniel's journey to a green card just became longer, more expensive, and more stressful, not because of any wrongdoing on his part, but because of how his bank account was reported to federal agencies that he did not know were quietly watching. Daniel's case is still pending as of mid-2026. That is the second story I want you to remember. This is the part of immigration law that surprises people the most, and it deserves its own quiet moment before we move to the action plan. In criminal court, the government carries the burden of proof. The government has to prove guilt beyond a reasonable doubt, which is the highest standard in any American courtroom. In immigration court, the burden is reversed. The applicant, meaning the person applying for a green card, an extension, a change of status, or naturalization, carries the burden of proof. The applicant has to show that they deserve the benefit they are requesting, on the record, with documents, with sworn affidavits, and with credible testimony under oath. That rule is found in Section 2409 of the Immigration and Nationality Act and is repeated in the federal regulations at 8 Code of Federal Regulations, Section 2409. The government does not have to prove that you did something wrong in 2026. You, the applicant, have to prove that you did not, or that what you did was allowed under the specific statute on your specific date. If a bank report, whether a currency transaction report or a suspicious activity report or even a Form 1099 has been filed about a deposit pattern, a remittance pattern, a gift pattern, or a cash deposit pattern, that report is treated as a piece of evidence inside your immigration record. It is not a criminal charge. It is not an arrest. It is not even a finding by a court. But it is evidence, and it sits in your file before you ever walk into a USCIS field office for your interview, or before you ever log into your My USCIS account to schedule a naturalization ceremony. You then have to overcome that evidence with documents you may not have thought to keep. That is why the bank account moves you make today, the ones no one has ever explained to you and the ones your banker has never explained to you, are now part of a record that can be quietly read in 2026 by a federal officer that you will probably never see face to face. That is the rule. That is also why the rest of this video matters. Now I want to talk to you directly about the people who will try to use this fear to take your money in the weeks after you watch this video. They are not your friends. Even when they speak your first language and even when they sit in the same strip mall office building that your cousin once recommended on a Sunday phone call. They are called notarios in Spanish-speaking communities, or sometimes notaries in Filipino or Vietnamese or Korean community newsletters. But in United States immigration law, a notary public is not a lawyer and is not licensed to give immigration advice. The federal government has warned about this practice in every year since at least 2007, and in 2026, the warning is louder than ever. In 2026, the Department of Justice announced 12 new indictments of individuals posing as immigration consultants in California, Texas, Florida, and New York, with related actions in Illinois and Georgia. The Department of Justice referred to these individuals as unlicensed practitioners, and the Federal Trade Commission issued parallel consumer warnings in Spanish, in Tagalog, in Vietnamese, in Mandarin, in Korean, and in Punjabi. The pattern is the same every time. The notario looks at a suspicious activity report or at a currency transaction report and tells the family that the only way out of the federal database is to file a special private petition that the notario has invented, to pay a premium processing fee in cash for a service that does not exist, to buy a tax product that says it will clear the SAR, or to invest in a specific cryptocurrency platform that promises to clean the immigration record through some supposed offshore mechanism. None of that is real. None of those products are recognized by the Internal Revenue Service, by FinCEN, or by the United States Citizenship and Immigration Services. Sometimes the notario is paid $2,000 upfront, sometimes $8,000 in installments, sometimes much more in a single cash payment documented only by a one-line receipt. And the family is left with the same audit, the same interview hold, and now less money to pay the legitimate licensed attorney they should have hired in the first place. The safer path is straightforward, and it is the same for every immigrant family in the year 2026. Hire a licensed attorney who is a member in good standing of the state bar of the state where you live. Verify that attorney through your state bar's public directory before you pay a single dollar in retainer. Do not pay a notario. Do not pay a tax preparer who is not also an enrolled agent or a certified public accountant for advice on whether ASAR affects your immigration case. Bring your bank statements to that licensed attorney and ask, in writing, for a written opinion. That written opinion is your protection in 2026, and that written opinion is worth more than any rumor your cousin shared last Sunday morning. Here are 7 specific actions you should take right now, written as plain steps that you can begin this week and that any careful immigrant family in 2026 should be walking through right now, this month, before another flagged deposit piles up in a federal database that you cannot see. First, open every bank account you have ever held in the United States, including every joint account, every savings account, every money market account, and every credit union account, and ask each bank in writing for a 6-year history of any federal filing made in your name, including any currency transaction report, any suspicious activity report, or any Form 1099 that was issued to you during those 6 years. Second, print the last 12 months of statements from every account in your name and place those printed statements in a single dated folder so that when your USCIS interview day comes, you have the record on hand, not just in your memory and not just on your phone. Third, list every cash gift you have received above $500 from any single person in 2025 and 2026. Write a short gift letter from each gift giver that explains the amount, the date, the relationship between giver and receiver, and the source of those funds, and keep those signed letters next to your bank statements and your transfer receipts in the same folder. Fourth, if you send money abroad through a wire transfer or through a licensed money transfer operator that is registered in the United States, keep every single receipt, print a paper copy every month, and ask the operator for an annual summary that totals your outbound transfers for the year so you can match it against what your bank and the Internal Revenue Service are likely to see. Fifth, if you ever receive a Form 1099 miscellaneous from a bank for any gift-like deposit, talk to a licensed enrolled agent or a certified public accountant about whether that amount must be reported as other income on your federal Form 1040, especially because for 2026, the IRS treats certain large gifts differently from earned wages under the annual gift exclusion rules. Sixth, run the official IRS Individual Taxpayer Identification Number renewal check on yourself and on your spouse. If either of you files taxes with an ITIN, because ITINs not used on a federal return for 3 consecutive years expire automatically under the 2026 revision to those rules, and an expired ITIN can halt an immigration filing silently. Seventh, schedule a single paid consultation with a licensed immigration attorney admitted to the bar of the state where you live. Bring the folder you have built through the first 6 steps. Ask specifically about your visa category and your specific situation, and ask that attorney to write a written opinion about whether any past or current bank filing in your name could affect your renewal, your adjustment of status under INA Section 245, or your naturalization application. Do not skip the seventh step, even if the other six feel complete, because the seventh step is the only step that protects you from the notario down the street, from the rumor your cousin shared last week, and from the well-meaning friend at the senior center who watched the wrong YouTube channel last month. Focusing on fear alone is not the purpose of this channel. The purpose of this channel is to take the federal record seriously so that it cannot quietly take your record from you. The laws I have walked through with you today, including 31 U.S.C. Section 5313 on currency transaction reports, 31 U.S.C. Section 5324 on structuring, the Bank Secrecy Act regulations in 31 Code of Federal Regulations, Chapter 10, and the Public Charge Review in Section 212 of the Immigration and Nationality Act, are old laws applied with new database speed. They are not failures waiting to happen. They are records waiting to be explained. When you have the records, when you have the receipts, when you have the licensed attorney, and when you have the 7 steps in motion, the federal agencies that are quietly reading your file see a person who is organized, transparent, and prepared, rather than a person who is hidden, confused, or frightened. That is what the United States Citizenship and Immigration Services wants to see in 2026. That is what the reviewing officers write down in their internal notes on the day of your interview. So take what I have shared with you today as a quiet call to organize, not as a quiet reason to panic. Organize the folder, write the gift letters, sit with the attorney, and keep walking forward, because preparation is what turns the federal record from a threat into a story you can tell with confidence on the day of your immigration interview in the year 2026. Friends, that is what I wanted to walk through with you today on this channel, and I want to thank you by name for staying with me through every single one of these 7 steps and through every single one of these 2 case studies. If this video helped you see your own bank record a little more clearly, please subscribe to the channel and turn on the little bell so that you do not miss the next one when it lands. Tell me in the comments below what your specific visa category is right now, whether you are a permanent resident filing Form N-400, an H-1B worker filing Form I-485, a naturalization applicant getting ready for your civics test, a parent here on a B-2 visitor visa wondering if you should ever apply, or a retired senior sending remittances home every single month, and I will use those comments to choose the very next video that fits your kitchen table conversation. Then share this video with exactly one person in your life. Maybe your sister, maybe your adult daughter, maybe the friend you met in line at the pharmacy last Tuesday, who has the same bank account pattern and the same quiet questions, and send it to them before this weekend. Because every month without the folder is another month where the data is quietly being filed under your name. Remember this one sentence with me today, and carry it into every conversation you have about money and immigration from this moment on. Preparation is a form of power, not panic, and the fear ends on the very day that you start the folder.